This article here is talking about commercial real estate. I thought it was really interesting. It's out of the Financial Times. They give you a lot of detail, but I'm just going to point to a few things. Companies are dumping record volumes of office space onto the sublease market, flashing a potential warning sign over the long-term health of office properties that comprise the biggest chunk of U.S. real estate. This is what I talk about for this specifically all the time because it's so serious. It's so important, so integral to what we've been seeing here in the markets. And they mentioned 2008, check this out, the amount of sublease inventory in many US markets is at or exceeding levels reached in the aftermath of both the dot-com bust and 2008 financial crisis. And that, of course, is going to get worse. It will expand further, as they say. That's when you know there's an issue, because all of these companies, they talk about it in these two paragraphs, all these companies are essentially dealing with less real estate. They know that. The expectation is that when everything supposedly recovers, 10 to 15% less real estate, commercial real estate, will be needed. And that is going to take a long time to fill up. In the meantime, you've got problems with so many different factors here, whether that is the company that's holding on to empty real estate, whether we're looking at all of the landlords, all of these buildings, all of the other companies that are surrounding them that rely on people and businesses to be there. I mean, right now it's devastating already. Already, so many small businesses have been simply put out because you got everyone working from home, and these downtown cores in all of these major cities are not having the same effects that they were previously. Everybody's working from home. No longer do they need that, little coffee shop on the corner that were selling little sandwiches at lunchtime and things like this. We have to look into that. There are so many of these small businesses that may seem insignificant to an investor, let's say. Oh, I don't care. I'm just going to buy the S&P 500 or whatever it is. But we got to understand how this affects real people. If real people have less money, then of course they can't buy things. And the economy, which relies on the consumer, 70% supposedly, is the consumer. Well, you've got a big problem that cannot be turned around by just pumping up the stock market. It doesn't work like that. This article here is talking about what's happening with the bankruptcies of these big companies. They mention the names Neiman Marcus, JCPenney, and so on. You've heard it all before, but they just mentioned something that I wanted to talk about. The magnitude of the bankruptcies has been larger this year compared to previous years. You're noticing national brands and other prominent franchises that had hundreds of stores now being liquidated or going through a restructure to salvage what they can. About 60% of the retailers that had filed for bankruptcy in 2020 through August listed more than $100 million in assets, compared with 50% of filings during the same period in 2019, 36 in 2018. This has been growing, the trend has been there, but it has accelerated here in 2020. When money is free, lenders start charging for everything else. Squeezed by negative rates, European lenders impose more fees. What do you think? What do you think is going to happen when you start going into negative rates? You're going to have problems. You're going to have problems, and certainly they are. Banks aim to weed out unprofitable clients. If they're not going to make money from you, they don't want your money, apparently. Apparently, your money is no good here. Like, that's how crazy this system that they've built is. You've got money in the account, and they're just trying to just get you to move it out. That, to me, is like the fractional reserve banking no longer is enough. We can't do enough with that. We can't do enough with it, apparently. I mean, what a topsy-turvy world. This system, when it collapses, is going to be so devastating on so many levels. I have no idea. I sit down and I think about all of the different possible situations, the unraveling process, what goes through here and there, and it always ends up with a big mess. I mean, I want to use a different word, but anyway, there's no possible way that this ends well for so many different industries, so many different people. It's a disaster created by the activities of the central banks. I'll say it over and over again. This was actually quite interesting because it's an industry that many would forget about, and that's the buses. The wheels on the nation's buses aren't going round and round very much these days. Demand for bus travel has fallen by more than 80% right now. They don't want to travel here, and as a result, this is causing major revenue slump. Look at what's happening with the different metros, the subways. There are, these major shortfalls, revenue not coming in. Of course, that's going to impact people. They lay people off. They've been doing that already, and you've got issues for so many different people. This is just something that supposedly is temporary. We'll see. But will there be as much of a need for these buses, for these different modes of transportation? I'm not so sure, at least not next year, and who knows what happens after that. The whole work from home thing has disrupted a lot of different industries, and I don't think people really had the foresight to see how many things are affected. And since this channel is all about financial education, something that I have been bringing up ever since I wrote my book, this right here is bang on. Kevin O'Leary, 100 million Americans have nothing set aside for retirement. And he says specifically, this is a failure of the financial literacy that started as far back as the 1970s. We need to change the curriculum at ages 13 and 14, explain how a credit card works, how the market works. It needs to be mandatory, not supplemental. I do agree with that. And if only this would happen. I think right now, before that gets changed, parents, they have to start bringing this information to their children. Not everything, there's just a few basic things that can be taught over the years. Unfortunately, a lot of the parents don't know either, and that's truly unfortunate. But if you are here, if you're watching this video right now, you made it to the end of the video. By the way, at this point, you have about 25% of the viewers that are still remaining. Thank you for being one of those. That's for sure. I really commend you looking into this information, because I know that you are going to share your information that you collect all throughout the days and the years with your friends, with your families, at least what you think is relevant to them when time is appropriate. That's a whole different story. But all right, that's enough for this video. Let's finish it up.